This number was actually a bit of a yawner. It made us yawn a little bit because we already knew last year we were going to have bigger numbers this year, but this number is just confirming that, yeah, prices have gone up. Yeah, inflation has gone up, but not to the tune of what some people had thought. People were looking at a much higher number, and also confirming that inflation, as the Fed has mentioned, is somewhat transitory at this point. A lot of my contemporaries are saying the same exact thing, that it was a whole big bunch of nothing at this point. But at the same time, we do realize that we have to put things into perspective. And as the economy begins to open up, these numbers may or may not go up. I think the big thing right now is that what the Fed has to decide, Jerome Powell has to decide, how is he going to respond more to the money market and the overnight rates, which we're starting to see bigger liquidity right now. That was something that we hadn't seen before. Fed's still pumping 126 plus billion dollars into there. So that's a number that we're going to be watching. And I think that will reach its conclusion in the fall. I think $3.5 trillion on the package. Yeah, all these big companies like Deere, like Caterpillar, they're going to make some decent money because the infrastructure of America uses their products quite frequently. Also, housing is improving. We're not seeing the high pricing that we see, but we are seeing housing starts improve. And that also affects equipment from the aforementioned companies I mentioned before. So just remember that you want to be in those sectors definitely for this infrastructure play, but I would not go beyond, unless it's a core holding, I would not go beyond the 8 to 12 month range on any of this, unless you're adding it to your portfolio and it's becoming a core holding. That's when you keep it there and you're going to make some nice money along with some quality dividends.
That's nice.
Much like last year, we take one step ahead and then we go 2 steps backwards, and all of a sudden we jump ahead. Yeah, absolutely. We're going to absolutely see that when we go into end of August. Remember, as I've said before, you have a limited amount of players. Some people are taking their vacation. Some major houses are pulling back on their commitments to different companies, different positions out there. So yeah, we're going to see a little bit of that. But also, yeah, historically, September has been a month where mutual funds, hedge funds, many different outfits are taking profits. And people forget that. A lot of people forget, these companies and what have to take their profits. They usually do it in September. That's why you see towards the end of September, beginning of October, it starts getting a little bit choppy and ugly sometimes. So we have to keep that in mind. Now, I'm not saying short the market the minute, this stuff starts to happen, but you're definitely not going to be wanting to get anything big in terms of big bets at this point. At that point, you better say to yourself, you know what? Let me go small, let me be strategic, and let me find something that's going to weather the storm. Some people say utilities, some people say get back into tech. I say, yes. Just make sure that you're in there. And if you're in it, you're going to be rewarded for the bets that you place, or you're going to face a little choppiness, but that's okay too, because long-term, you're going to get rewarded as well. I don't believe that investors are enthusiastic about any type of regulation, but the crypto market knows that this is coming. This has been a cat and mouse game for years. And I believe that once the US or the SEC or whatever governing body has decided finally, okay, we're putting our stake in the ground, this is how we're going to regulate this market here in the United States. Once that happens, we're going to see the rest of the world follow suit, because I think for one reason alone, taxes, revenue for the United States. And other countries are going to see that and they say, hey, where's my dime? Where am I going to get some money too? So don't be surprised if that happens. Now, as you said, with the crypto market going up, it's not that they like regulation by any stretch of the imagination, but But I want you to think about something. Regulation has positive points in some aspects as well, because it creates a orderly marketplace, which is really what regulation was supposed to do for stocks and the like. And sometimes it gets a far field. Sometimes it doesn't go the way that we think it's going to go, but it has its place. And I think that everybody in the cryptocurrency realizes, hey, this was the wild, wild west at one point. But all of a sudden, the buildings are being built, the skyscrapers are up, and we're going to have to become just like everybody else. And then those investors may move on to other places, but not long term. They may do it short term to avoid the volatility. But volatility also is an area where you can make a lot of money if you're a smart person. And these traders love volatility. So stay tuned.